Yeah, today we are going to discuss an introduction of the new people as income tax. Income tax is very important and a crucial paper where individuals, business organizations, they consider income tax or corporate tax as a very important thing in their financial planning in their future. That's why it is an interesting paper. At the same time, it is very what we call crucial for every person to really go to conference. We are introducing a very complex introduction. In India, income tax is an example of that. To be frank, what do you mean by tax? You collect revenue from the people. The central government is going to impose tax. That is called tax. There are two types of taxes. One is direct tax and another is indirect tax. The example of direct tax imposed by Central Board of Direct Taxes, administered by Central Board of Direct Taxes, and we have an act for this. It is Income Tax Act 1961. What is this income tax? Income tax is the tax on the income of an individual or a company. A company, we call this a corporate tax. For an individual, we call this as income tax. And it is as per the provisions of Income Tax Act 1961. Under the Income Tax Act 1961, income tax will be there. Why the central government will be imposing income tax? The central government will be imposing income tax for its public administration. For this public administration, income tax is very important. To collect, it needs funds, therefore, to collect the funds, the only way that the government can do by imposing tax. Income tax in India is levied on various types of income. That is, there are 5 heads of income. We call this as heads of income. Income from salary, income from house property, income from business and profession, income from capital gains, income from other sources. Taxes can be classified as already I explained on, I stressed on this, direct taxes. Classified as direct taxes, indirect taxes. What do you mean by direct taxes? Impact and incidence will be on the same person. That is called direct. So what do you mean by impact and incidence? If a person on whom the income tax is imposed, the same person he will be paying the tax. That is called direct tax. He will not or she will not transfer the burden of payment of tax on the other person. If the transfer is done, it is called as indirect tax. If impact and incidence will be on the same person, then it is called direct tax. If impact and incidence will be on the different person, then it is called as indirect tax. Examples of direct tax, we have income tax, wealth tax, gift tax like this. If a person has given a gift, if the gift is more than so much limit as per prescribed by the central government, then it is said to be a gift tax. Indirect tax. The impact and incidence will be on this different person. The burden of payment of tax can be transferred. Then it is called indirect tax. For example, GST, goods and services tax. Earlier we had a VAT, value added tax. Now it is called GST. What is this GST? When you buy any product, the tax is included in the MRP of the product. The tax is included in the MRP of the product. When a wholesaler buys the goods from a manufacturer, the tax is included. And the wholesaler transfers the burden of payment of GST on the retailer. Retailer will buy goods from wholesaler. Wholesaler might have paid the GST to the manufacturer. Then when he sells this, he will be transferring the burden to the retailer. Retailer ultimately transfers the burden to the ultimate buyer. In that way, the burden of payment of transfer of burden of paying the tax is transferred, then it is called indirect tax. Why are tax imposed or levied? To collect the revenue. Without revenue, the central government cannot function, isn't it? For construction purpose, for other purpose, it needs funds. From where the central government is going to earn the funds? Through income tax. Overview of income tax. We have many acts. Income tax act is one of this. Then the meaning of canons of taxation. What is this canons? These are the features. The tax provisions are built based on these features. Canons of taxation simply mean the characteristics, qualities of a good tax system. It should be canon of equality. There should be equal treatment of paying the tax. There should not be any difference. Canon of certainty. Certainty means every person should be ready to pay the tax. He or she should not skip the payment of tax. Canon of economy means the expenses that the central government is going to incur to collect the tax should be less. Then canon of convenience, it should be very easy to pay the tax. They should not be tough. Canon of productivity, it should yield for the public expenditure. The central government should get a lot of funds from taxation. Canon of elasticity. Elasticity means flexible. The tax provision should be flexible as per the changing income and expenditure persons. Income and expenditure positions of the person. It should be the canon of simplicity. That the tax provision should be simple. It should not be difficult. Then canon of diversity. Taxation must be dynamic. Based on the changes in the market, the tax system should incorporate the changes. Then what do you mean by previous year? Assessment. 12 years duration. Assessment years is 12 years duration. It starts from 1st April to 31st March. Then previous years is the 12 years duration previous. The previous year's income will be considered for this assessment year. And this assessment year income will be considered for income tax in next tax. Thank you.